All right, hello everyone. It's Tuesday, February 11th, and I'm starting off this video showing the seasonal profile, the 10-year seasonal profile. This is a script that I made on TradingView that can plot the um, seasonality profile for any ticker, any look back in years, and show you the profile as it was in the past with the years. Like this one shows the profile was 2009 to 2018 as it was last year, and this current 10-year profile is composed of 2010 to 2019. So I know that I talk about seasonality a lot because it it has a small to medium weight of the decisions that I make for longer term trades, for medium to longer term trades, meaning trades that I want to hold for at least 30 days. And we are at a point right now that is traditionally a relative bottom in the markets before we actually start to cruise higher until the end of the first quarter, and then you've got the May time frame here where you've got the sell in May and go away adage, and then stocks kind of go sideways until sometimes there's a big sell-off in June, and this was more recently pronounced in 2016 with Brexit happening in June, and that's what this kind of little dive is right here. So you'll see seasonality stuff on like equity clock seasonality or MRCI, MCRI. I can't remember. It's either one of those. They have some good stuff too, and show you trades over the course of the year that fit the seasonality for whatever instrument that you're dealing with, where it's a really good time to be long or short because you're trying to capture a move based on the historical bottom or top given a certain look back. I like 10 years. 10 years seems pretty good, and sometimes I like applying instead of a direct average. I like doing a exponential moving average or an EMA of the recent years. That will give more weight to the recent years instead of just averaging all 10 years. It'll give more weight to the recent years. So what I want to show right here is this place that's around February 10th, where we traditionally have some kind of a bottom here, and we have some kind of a sell-off right before that. And there's been a couple of ideas that I had around when I was talking about the early January, or I mean, sorry, late January to early February correction that we could have that would signal this bottom. I'm not sure why this isn't loading. Let's see. See if I can get this to load. I guess not. Okay. Well, anyway, that idea showed that there was a good chance, based on a lot of stuff. There was dark pool selling, which is where I have this guy right here. Back then there was this huge there was this big 20 million worth of dark pool selling right up here at the top that occurred over 2 to 3 days, and then the virus started hitting the news after that. So they used the virus as an excuse, in my opinion, to sell the markets, and then the media, in concert with the major players of the markets, pushed that story. And right here on January 31st is where it kind of reached its high point, meaning the news was at its zenith, and then we had a big reaction that the following week and a rebound. That is this little tiny correction right here that's traditionally starts, sometime late January. Right here it's showing that it's early February, but you can go back to You can go back to, let's say, 2018 or 2014 and find that little sell-off started in the last week or so of January and ended on the first week or so of February. And 2018 was like a big year. That was when you had like a 15% correction, and it really only lasted 7 to 10 days. The other thing that I really wanted to look at was oil. Let me bring this chart over here. So oil also has a seasonality profile, and I've been watching this move. This guy right here. This channel is really tight. And on a day chart, there's something interesting going on here. Let me turn off some of these pivots. So the only real harmonic pattern that I'm a fan of is this AB equals CD pattern. And you perform it by finding the height of one wave from here to there and attaching that same height to the top of the next wave. And that value looks like it is 49.31. So I have this slightly off here. And what was that low right there? That low was exactly 49.31. So that's really interesting to me. So this is what an AB equals CD pattern is, and it looks like this. It sometimes is a big correction wave. That is in the middle of a bigger wave. So potentially this is the first correction in a much larger wave that's actually going to go higher. In this direction, potentially. And I think it's really interesting that this level is right at 49.31. Let me correct this again. And that was the exact low on oil futures. 49.31. I'm looking at this number up here. 49.31 was the exact low. And now it's trying to get out of this channel. This channel is just this is just a regression trend. I like using these because it kind of auto figures out what or auto discovers the channel upper and lower boundaries. And you can turn those off to get the true channel, but I like to use the two upper and lower standard deviations to get it. So it's trying to escape this channel. This is really, really interesting to me that this is so pinpointed. That was the low right there. So that just right around here is where I was diving into the mini QM contracts, trying to get a good position, and I'm just going to let this ride. My target is 55, and the reason why it's 55 is because I am a huge fan of these Camarilla pivots, and we've had like an 18% decline already this year in oil. It's been huge, and I wanted it to get to this S4 year, which would have been amazing if it could do that in only the first 1 or 2 months of the year. And if it did, I would have just kept buying on that. And the back test of this year S3 is about 55, and that's kind of where my target is. If we go back over to, if I go to the CFD for oil, and I pull this up for the seasonality, these are all just things to use to decide on a trade or not. This was a big reason why I decided on this trade. So the next FOMC is not till March. We usually have a break in February. There's for the last couple of years, there's only been 8 FOMC meetings a year, and there's a break in February and November. The current performance, this is the fitted performance. I have it fitted so that we can see the seasonality profile, which is in yellow, for the last 10 years, and the current 2020 performance, which is at negative 17%. This is fitted, obviously, because over here it's only showing negative 3%. I do that on purpose, or else this would just be so far below. It would be way down here, and it would distort the entire chart. And that's an option that you can just select in here, fit performance. So usually, right with stocks, which I don't think is a coincidence, there is a major bottom around February 11th. And then this kicks off the strongest time of the year for oil. February is the coldest month of the year for the Northern Hemisphere. That's one of the reasons. And it kicks off a trend that lasts until April to May. And this trend, you can see from the entire profile, is the longest, or I'm sorry, the biggest bull trend from here to here. This length, this date range, whatever this is, something like 77 days. So about 2.5 months or so is how long this trend lasts. So that's one of the reasons why I'm going long oil here, and you see that this in the seasonal profile, there is actually a big sell-off that starts in early February and lasts until maybe a week or so. Obviously, this year has just been straight down pretty much the whole time, but this little trend is here that is a bearish sell-off, and everything kind of coincided together right at this February 10th, February 11th, which is one of the reasons why I'm looking for longs here, and I'm looking to hold most of it, probably this entire way. But I'll take some profit at that 55 level that I talked about. Futures are doing great. There's a lot of dark pool buying activity. You can see all that dark pool buying activity in the Daily Edge Live channel. It posts all of the active dark pool blocks on SPY, IWM, DIA, QQQ, and any other dark pool blocks that are of note, as well as many other stock blocks and ETF blocks as well that are just large blocks that we're interested in. So there's a lot of filters in place, a lot of very smart filters. One of the things that you can actually see are these pre-market blocks that I have filtered out, and Bank of America had a pre-market block that is probably a late block from yesterday's close. I think yesterday's close was 34.68 to 34.69, and the current price is almost 20 cents above that. So there could be some dark pool buying on the banks. I'm looking at this chart that I had earlier that I showed. I had an idea about right into the coronavirus on the 22nd, 21st in January. When that whole news cycle started, bonds were right here, just sitting here right on this area. And there was a good chance that we would break out of this wedge that took a long time to construct. Since the beginning of the Fed repo, believe it or not, Fed repo started about right here or somewhere around here in September, and kind of trailed down, which is counterintuitive to me, considering that they were buying hand over fist and have pretty much recouped all of the $4.5 trillion balance sheet that they started unwinding in October 2018. And now they're almost all the way back. I think if I go to, let me see this. We can actually see it. I want to look at it. If you go into this link, you can see that the selling started in October 2018 and then bottomed right around August 28th or September. This is when Fed repos started, and here we are about halfway recovered. So I don't know what they're doing, but they're going completely against their narrative that was only a year ago. Okay, I'm looking for stocks to continue on this trend that we had before. Dow Jones. This is what I'm expecting for Dow Jones. This is I have the 60-year seasonal here, but I have it set for election years only. So we have 15 data points. This is also showing a relative bottom around February 10th. For the last 15 election cycles, February 10th on average was a bottom, and we increase up to April. So oil kind of runs with stocks during this time. 52 days. That could just be because we were dealing with futures, but CFDs before, and this is an index. It's only on Monday through Friday, so it's around the same time. April. Let's see what that was. April 2nd. This was it's actually further, so it's right. So that's what I'm looking for, and dark pools are showing the way. They continue to buy. My current target for ES is about 3,400. And I think we can get there. How did I get 3,400? I'll show you. A lot of these scripts that I'm using are all free on my TradingView profile that's listed in the YouTube area. This guy here, this 3.0 extension, that's up here. This is at about, this is 34.28 for S&P 500 futures. I just said 3,400. So that's kind of why my target is where it is. For SPX, spot, that value is a little bit under 3,400. That's why my target is where it is, and I think that we can make it there. Dow Jones index is similar. It has a target that's not that far away from this 3.0 extension. And we've got a big one coming up here also, I think, unless I'm mistaken. Nope, not really anything. So those two guys, that was the reason behind it. And so I'm going to just stick with seasonality until it actually lies to me. Until one of these charts lie to me and tell me that we're not following this anymore. This was a rapid recovery a little bit early that we had last week, and I blame the repo stuff a little bit, maybe the PBOC a little bit, but until we start violating this in some meaningful way, I'm just going to stick with the idea that we're just going to continue to go higher over the next 30 to 50 or 30 to 60 days. Okay, good luck.